Hey everybody, hope you're doing well today. Let's take a look at the circular flow model, how money, resources, and products flow in an economy. And this is part of our introductory series of videos called The Fundamentals of Macroeconomics. And the circular flow model is a fundamental thing for you to understand as you head on your journey towards understanding macroeconomics. So what that means is take a look at this video, or take a look at this model. It's super good. I gotta give credit to Jason Welker. He's an IB econ teacher. Has many videos and resources available on the internet. If you're looking for a place to try to make some sense of some aspect of IB economics, check out Jason's videos. They're excellent. And he, I assume, created this model. So I got to give him credit. So take a look at this really quickly. So here are households, right? Remember, everybody wakes up in the morning in a household. And they then will go to a firm. Even if you're an independent operator, like your own business owner, you still wake up in the morning, go to work at your firm. Okay? So think about households as being the beginning and end of all things in many ways. So even if you're the owner of a business, you still end up occupying that firm. Okay, so let's talk about how this works. And I'll just walk. I think the easiest way is just to walk through it, and talk about it as I do it. Okay, so take me for example, right? I wake up in the morning. I'm a school teacher. I take my labor. I go into the resource market. It's already been purchased in terms of a contract, right? And then I go to school and I work in the school all day long. And in return, and so I become a factor of production. I'm one of the costs to the firm, right, to do business. And as a result of me selling my labor, I receive money in return. And I take that money, right? That money comes back with me. Hold on to the banking sector. Skip this. We'll make it really simple at first, and my money comes back to my household. And then I have money. Yay, and I can go to the store and buy things. Okay, so now I'm home, and I'm going to take my money, right? And I'm going to take it into the product market. And let's say I'm looking for a gift and I buy a little bracelet. Okay, I buy a bracelet, which is a regular, normal good in the product market, and I pay, say, $10 for my bracelet, right? And to whom? Well, let's say there's a local artisan here in Santiago, Chile, where I live, who's made a bracelet and made it out of copper. It's really cool. And she woke up. She is part of her firm, and she creates these bracelets, right? And she puts them in the product market where I purchase them. And I purchase it with my money, so my money becomes her revenue, and I take that good, the bracelet, home. And there, in a really simple manner, is the circular flow of money and goods through the resource market and the product market. Okay? There are other examples. I could be talking also about land, about capital, right? And the different names for this kind of money, this kind of income is interest, right? Or rent. In the example I gave of selling my labor, that's an example of a wage. But I'm not going to get in. I don't want to get into in this video all of those smaller sort of discoursey details. I just want you to understand the flow. Okay, so one nice thing to think about this is think about this sort of as a pipe, right? There's a nice circular flow pipe that's going around, right? Around and around, and it's a contained system until you break into the pipe. Okay, so now let's talk about some ways in which it's not quite so simple. And this is taking a microeconomic, fairly simple circular flow model and adding to it the macroeconomic aspects of it that come into play at the beginning of macroeconomics. But I'm just going to go into it now because you might as well learn all of it at the same time. Okay, so remember the money that I brought home, right? I brought this money home from my job, right? But it doesn't actually, in reality, it doesn't actually go all the way home, right? I don't keep all my money in my house. No, where does it go? It goes into the bank. Okay, so, and not, thankfully, happily, and at this point in my life anyway, some of that money I actually don't even spend, right? And some of this money actually leaks out of the system, and this is a term right here for a leakage, right? This money is coming out of the system. It's not continuing to flow. It's not moving anywhere. It's not going anywhere. It's just sitting in the bank. Okay? And so then the banks who collect money, right, and of course they're paying an interest rate, a price to save that money, which is another form of income. But to simplify, that money's just sitting in the bank. Now, banks are in the business of making money on money. They collect people's money. They package up those little packages of, $1,000 here, $1,000 here, $5,000 there, and then they put it into a a package. It's called a loan, and they loan it out to people, right, who say want to, I don't know, buy a house, right? So this right here, investment is money coming back into the system in the form of, let's say, a house loan. Okay, so while the savings are a leakage, investments actually, in some respects, that same money coming back into the system in the form of a loan. Okay, so you get the idea that the banking sector, there's a leakage of money that goes into savings accounts, and then banks take that leakage, that money they've collected, they've paid an interest rate for it, right? But then they sell it back into the marketplace for a profit at a higher interest rate, right? Banks are no different than, say, a pizza shop. A pizza shop collects cheese, it collects dough, it collects pepperoni, tomato sauce, and they package it together and they sell something else, and it's called a pizza, right? Well, banks just collect people's deposits, little chunks of money, $1,000, $5,000 here and there, and then they repackage it in something called a house loan, which is just a collection of these little pieces, just like a pizza is a collection of dough, cheese, tomatoes, and pepperoni, and they put it back into the marketplace. Okay? So savings are a leakage, investments are a injection back into the system. Okay, now let's move from the banking sector up here to the foreign sector. Now, what's happening here? Well, let's pretend, remember I took this money and I bought a bracelet from a local Chilean artisan. But let's say that instead of that, I wanted to buy, I went online and I bought a book from Amazon.com. Okay? I bought a book, and the interesting thing about this, and it's a little counterintuitive, so just sort of pay attention here. You got to track where the money's going. Remember, I made my money in Chile, right? And then I go to the product market, which is going to the internet, and I go online and I buy a book. And I take my money that was made here in Chile at my school, right, in my house. I went back to the product market, and that money actually leaks out of Chile and into, in the case of Amazon, right, it leaks out of the Chilean circular flow and into the United States. So the book is an import, but in terms of what we're looking at here, we only care about where the money's going, and the money's leaking out, just like in the savings account, just like down here, the savings was a leakage. This is money that was made in Chile that's leaking out and going into the United States. The book is imported, so I get my book and I get to read about whatever, something that interests me. So imports are leakages because the money was made here in Chile in one country, but the money is flowing out and going to another country. Okay, now flip that around. Let's say that there's a woman in Denver, Colorado, put her in Boulder, Colorado, right? And she's an outdoors person, and she loves to backpack, and she loves this company called Doite, which is a Chilean company. And she goes online. Remember, she made her money in the United States, right? And her money, now she goes online and says, hey, I want a Doite backpack because I love Doite. It reminds me of being in the Andes and down in Patagonia. And so she goes online and she buys a Doite backpack, which is an apparel company here, a backpacking gear place, Chilean company. And her money comes from the United States, boom, into the circular flow model for Chile. So her money is an injection into the circular flow model of goods, services, resources, and whatnot in Chile. Okay? Beautiful. Now, last sector. Okay, the other thing that happens is not all of our money, all of my money that I make at my school stays within goes into my pocket. Some of that is actually extracted, right, by the government in the form of taxes. Okay, so the government taxes me a certain percentage of my income, and in return, that's a leakage, and in return, they input or inject into the system public goods. Okay, and the same thing can be said for firms. Firms are taxed by governments also, and those taxes, right, leak out of this flow and into the government sector, and in return, firms also get to use those public goods. Okay, so So those are sort of injections in a sense into the marketplace. It could be education, it could be unemployment benefits, right? But all of those come from the taxes. Okay, so there is as a quick as I possibly could example of the circular flow model. I hope that you enjoyed it, and I'm looking forward to talking to you soon.